Thank you for our witnesses today, and Mr. Richards, again, thank you for coming to testify here about the challenges that Kentucky community banks face complying with all of the dizzying array of regulations, the avalanche of red tape that comes out of the Dodd-Frank law and the CFPB. And, you know, one of the things that one of the takeaways, the conclusion that I draw from both of your testimony here today is that although we in the United States pride ourselves as having a government that is a representative government, that we are a government that depends on the consent of the government, and that we talk about the importance of understanding the unique needs and concerns of our constituents, that when Congress and the elected representatives of the people delegate away our power to unaccountable, unelected directors in regulatory agencies like the CFPB, there becomes a huge disconnect between the realities that the American people face on a day-to-day basis and what the bureaucrats in Washington do in terms of designations and administrative decisions. And here we have a classic example of a designation of a county like Bath County, Kentucky, as non-rural. And so, Mr. Richards, for the benefit of all of the members of Congress on this panel and for folks here in Washington, D.C., as a fellow Kentuckian, please elaborate on your testimony about the rural nature of your home county.
Certainly. I wish I could take you all to Bath County so that you could see what we're talking about. It has 2 stoplights, but only one real stoplight. The second stoplight's for crossing for school children, and it has 3 major towns, if that's what you want to call it, and several other smaller communities. We have quite a large Amish population, so it's not unheard of to see a horse and buggy going down Main Street. So it's just a picturesque rural eastern Kentucky town.
And I think, Mr. Richards, you testified that there's only 2 other banks in your county.
That's right.
Could you talk about, once again, when you made that discovery that the Consumer Financial Protection Bureau had classified your county as non-rural? When you made that discovery, what was your, what impact did you see that having on your, not just your bank, but the community of Bath County?
Certainly. Well, what I saw it doing was restricting what products Bath Countyans could get from their banks. It just blew my mind when I saw that they hadn't thought that we were a rural county, and I just see it as taking something away from them, taking an option away from them. If they want to take out a balloon loan, they might not be able to if they want to do business with them.
And Mr. Richards, if your bank was denied the ability to originate balloon loans and offer this product offering to the citizens of Bath County, if balloon loans were denied qualified mortgage status in your particular rural community, what impact would that have on your bank and your customers? And as you answer that question, describe for the panel the type of customers that are served by your bank.
Certainly. A large percentage of our customers are on public assistance, Social Security, fixed incomes. To deny them access to credit when they qualify for it, I think is a disservice to them. And they've chosen our bank because they like doing business with us. And so if for whatever reason we're no longer allowed to offer those products and services to them, I don't see how it could be anything else but a disservice.
And this would be, and you make decisions, these are portfolio loans, so you're making a business judgment, you're retaining the risk. So you're going to, your incentives are aligned with the borrower to make sure that it's not only access to mortgage credit, but it's responsible mortgage credit. Your incentives are aligned. You're not turning around and selling these into the secondary market. Is that right?
That's correct. We have no incentive for our borrower not to pay us back.
Well, my time is running out. I want you to make one kind of, as a fifth-generation banker, one final comment, and that is, as a fifth-generation banker who and a bank that survived the Great Depression and 140 years of the banking business, I think I heard you testify that you're worried that in 10 years with this avalanche of regulation, you may not be in existence anymore. Can you speak to Dodd-Frank as the greatest threat to your bank in 140 years?
Certainly. It's crazy to me to think that we have made it through the Great Depression. We have made it through the stagflation in the 1970s and 1980s, and yet it's not a crisis of the market that poses a threat to us. It's regulatory. It's completely man-made. It's just crazy to me, and it's frightening. It truly is frightening.
Thank you.
Thank you.